everyone, thanks for joining me. Where has this year gone? And what a year so far we've experienced in the mortgage industry. Today, I'm going to look at the mortgage market for the self-employed. This is a market that is constantly changing, with both lenders and advisors having to adapt. In addition to this, self-employed clients may struggle to find a lender on the high street who will lend. Factors include income and how long they've been trading. We have specialist lenders out there who understand the difficulties faced and who will look at these clients with a more flexible approach. We know, unfortunately, it's not one size fits all approach for this profession. Let me start off with a couple of facts. A recent survey I've read states there's over 4 million people in the UK who are self-employed, with 49% of those saying they do not feel confident in finding a suitable lender. Obstacles can be overcome, and there's lenders out there who can help advisors through this maze. I'm pleased to say today I'm joined by Charlie Stack, Key Account Manager at the specialist lender, the Mortgage Lender, who I hope will be able to guide us through some of these questions. Thanks for joining me, Charlie.
Thank you very much for having me.
Can we start off by giving me an overview of the Mortgage Lender, Charlie?
Yeah, absolutely. The Mortgage Lender are, as you mentioned, a specialist lender. Now, we've been lending now for about 9 years, originally launching as just a residential lender. And then as the years have gone by, we launched into the buy-to-let space as well. We're now owned and funded by Shawbrook Bank as well. And we've developed into different areas of the market, not only just in the residential space, but with shared ownership recently launching, our large loan and interest only proposition, along with our extensive specialist buy-to-let proposition as well. I myself have been at TML for 8 years, starting off as a business development manager for the Midlands region. I then moved into a key account manager role looking after our specialist distributors, our packagers, along with our new build firms. And then most recently, I moved into the corporate account world, looking after the clubs and networks in December last year.
That's quite a CV there, Charlie, I must say.
I know, and everyone seems to say this to me because, you know, you do see a lot in the market of BDMs or account managers moving from lender to lender. I've been at TML, as I say, since I first moved into the industry. Straight from university, I managed to get the BDM role at TML, and I haven't looked back. You know, there's always opportunities to move elsewhere, but I love the company. I love what it stands for. I love the fact we're able to help those clients who maybe struggle to get a mortgage with the high street. Knowing TML's criteria like the back of my hand, I know that we are able to help with, as you mentioned earlier, we're going to be talking today about self-employed. We have got one of the best bits of criteria for self-employed applicants in the market. And that's a big, big reason why I have stayed at TML for such a long period of time. This
area, would you agree with me, self-employed, there's untouched opportunities for advisors?
Yeah, absolutely. I mean, as you mentioned earlier, there's 4 million people who are self-employed in the UK. Now, while this is down from the pre-COVID peak, which was around 5 million in January 2020, there was a bit of growth last year. You know, I think there was about 200,000 between January 2022 and December 2023, which indicates that the trajectory may be on the up. Now, we carried out some self-employed research late last year to find out some almost key insight from self-employed individuals around their experience getting a mortgage. And from that research, we found, I'm going to throw out a few statistics here and percentages. So 34% of self-employed individuals that we surveyed had never even applied for a mortgage. Concerningly, many have not even tried for a mortgage because of the assumption they'd be rejected as a self-employed individual. Indeed, the research found that 30% said they've never applied for one because they didn't think they'd be approved. And in addition to this, 26% said they just simply heard it was that little bit more challenging for a self-employed applicant to get a mortgage. Now, looking at the other reasons why self-employed people have not applied for a mortgage in the past, 36% of those said it was because they'd not built up a deposit. 17% said they were waiting for interest rates to come down, which, as we know, swap rates are fluctuating. They seem to have become quite steady lately. Inflation remained at 2%. Well, now, when was that? 2 weeks ago now.
Yes.
And then there was the anticipation of maybe a base rate drop in August. Then we had King Charles's speech 2 weeks ago, and now HSBC mentioned that they now think, and a lot of economists are coming out saying they think the base rate is likely to drop 0.25% closer to November time. But I think the key thing to highlight is the price of the base rate drop is already built into the pricing based on the swap rates. So, and that's a key thing that I think maybe self-employed, and not just self-employed, but borrowers themselves aren't aware of. And the fact that actually waiting until November if the base rate drops might not necessarily mean that mortgage rates will drop as well. Now, looking at a few of the other percentages as to why they find it difficult is 10% said they find the process of getting a mortgage as a self-employed applicant too daunting. Again, highlighting the importance of mortgage brokers to make that process as simple and efficient as possible. And then the interesting thing that we found was that 15% said their business is simply less than 2 years old. Therefore, they don't have the necessary documentation to prove their income when applying, highlighting the importance of understanding, what lenders are out there and the opportunities that, specialist lenders, and not even just specialist lenders, building societies, some mainstream lenders who have got that slightly quirkier criteria, they assess incomes in a different way. Because I think, sometimes self-employed applicants maybe have this, there's almost
There's almost a preconception, isn't there, that I've got to have at least 2 years accounts before anyone can actually look at me. So I think the message, from you, Charlie, what's your criteria for that then? Are you looking at 1 year accounts, or what's your criteria for that?
So what we want to be famous for in the residential space is our self-employed criteria, and there's 3 bits that come with that. So first of all, we can do 1 year's accounts up to 90% loan to value. So straight away, those 1 year's accounts, there's certain lenders that can do 1 year's accounts that maybe are not necessarily specialist, but their LTV might be restricted to 80 or 85. We can actually go that extra 5%, which again, straight away gives your client, gives your broker an opportunity to get that higher LTV.
Can I just ask a question? Sorry to interrupt you on that, Charlie.
Yeah.
But is there any occupation restraints on that?
No, and one of the most famous case studies we've got is we did a YouTuber, a vlogger, a couple of years ago. Now, this client originally went to the high street. The high street deemed it to be maybe not a consistent income. How reliable is it? They could stop making videos in 12 months. All of a sudden, their income falls off. Our view is it's a legitimate business. The way the world's going with technology and with YouTube and TikTok and all these other areas, that to us was a case we'd want to do every day of the week. Another example is for limited company directors. We actually use pre-tax profit plus salary. And if they've been trading 2 or more years, we always use the latest year's figures. So another case study we had was where a builder had set up a business year 1. Their figures weren't great. They had to go out and buy materials, buy a van, find clients. Year 2, they'd already bought all their materials. They'd got all their tools. They'd landed new contracts. They'd got repeat business. All of a sudden, the income had jumped a large amount. We were able to use that latest year's figures, regardless of the fact year 1 was really quite poor. So those 3 bits of criteria there are the 3 main areas. It's over 60% of our residential business is done on self-employed. So it really is highlighting the importance of getting to know your BDM and specialist lenders as well. So if you visit our website, you can go on, find your BDM, put in your postcode. You can get your dedicated field BDM and telephone BDM's details. Any inquiries, you're able to bounce off them prior to you even submitting the decision in principle with us.
So from that point of view then, Charlie, does the advisor have direct contact with an underwriter with you guys, or is it through the BDM they deal with the underwriter?
So no, they've got direct access to the underwriters as well. So obviously, prior to submission, speak to BDMs, either your telephone or your field BDM, get that inquiry sense checked prior to submission. Once the DIP goes in and that's all approved, it then gets allocated to one individual underwriter. That underwriter stays with your case from start to finish. They'll be in contact via email. They'll be picking up the phone to speak to you. It might be that there's, a discrepancy on a business bank statement against the accounts. Every lender has SLAs. Rather than you sitting in that SLA for the full time, the underwriter will pick up the phone and say, look, this is a concern I've got, or this is a question I've got. Can we clear it up over the phone rather than your case going back in the pipeline and have to wait the set SLA that we've got? So yeah, absolutely. Not only have they got their field and telephone BDM, they will have direct access to their underwriter as well.
Yeah, I think that is one big frustration with advisors. Having put an application form in, they haven't go to the bottom of the pile again. So that's good news.
Exactly, and I think naturally with specialist lenders, you are expecting the case to be touched a few more times than a high street lender. But being able to speak to your decision maker who's actually underwriting your case, it can just make that process a lot smoother.
Yeah. How do you look at salary and dividends, Charlie?
So yeah, absolutely. We can use salary and dividends. So normally for sole traders, we'll use the net profit. So it depends on what income your client needs. If they are limited company, using the pre-tax profit, we're already including the dividends within that. So we're actually using an extra level of income. Now, I'll send over an example to be attached to this podcast, which is a real life case that we did where we highlight a standard profit and loss account showing 2021's figures and 2022's figures, and then highlighting the 6 different outcomes you can get based on that profit and loss account, depending on a lender's criteria. Now, it could be that a lender uses salary and dividends. It could be that a lender uses net profit and salary, or it could be a lender like ourselves who use pre-tax profit plus salary. Now, based on this case example, if you went to a lender who used salary and dividends, based on the income on this profit and loss account, the maximum loan size would have been £160,000. If you came to us and used the pre-tax profit plus salary, the maximum loan size was £330,000. So again, just highlighting the brokers are almost need to understand certain lenders' criteria to be able to maximise that loan size. And it might be affordability is not an issue, in which case you might not need that criteria to come to TML. But it could be a conversation you could have with that client when you're having the initial conversations with them. We can go to a high street lender and get the best rate in the market, but you're going to be restricted to this loan size, or you can pay a slight premium and go to a lender like TML, but you will be able to get, potentially an extra £100,000 to £150,000 on the loan size.
Don't think I've missed it, Charlie, but is net profit, is this before or after corporation tax?
So what we will use is before tax.
Before, okay.
Exactly that. So again, that's the big factor with using us for those cases. And again, the example I've just discussed highlights that. In this example, if you compare net profit and salary to pre-tax profit and salary, we actually get an extra £55,000 on the loan size on that example. So again, it really is just very important to understand the criteria and give your clients almost the option of these are the lenders that are out there and these are the criteria that they've got.
Great. What about, from my point of view, we're seeing more inquiries from contractors. What's the industry view on it, and where do you guys fit in the market?
We are also seeing a lot more contractors. And I think, again, similar to the self-employed piece, we are an affordability solution. So although we're specialists, what we really try and push on the residential side is affordability. Now, contractors, we've almost split into 3 separate areas. So CIS contractors are, one of the most common things that we're seeing lately. And the reason we're picking up business from CIS is because we treat them as employed. So rather than treating them as self-employed and going on the income on the SA 302, we go off the income on the CIS slips, which can be a lot better for affordability. Now, a lot of lenders, maybe in the mainstream space, require them to have normally 12 months history or 2 months history and be in their current role for normally 6 months or more. With us, we only need them in their CIS role for 3 months. So again, it's just a solution. If your client isn't able to go to, a high street lender because they slightly fall out of their criteria, we could be that solution. The other thing is we'll do 52 weeks for affordability for a CIS contractor as well, which again, just a huge affordability solution. Now, the 2 other areas are day rate contractors, where we've split into existing and new contractors. So a new contractor could be classed as someone who's never contracted before, but they've got 12 months experience in that industry. We just need them to be 3 months into their contracting role. We do a weekly rate times 48. Again, a lot of lenders might be 46 weeks, some might be 42. If that client is earning a couple of £100 a day, timesing it by those extra couple of weeks, again, could be the difference between achieving that loan size or falling just short. The final one, existing contractors, they need to have 12 months experience contracting, but they can be at day one of their new contract. Again, we do a weekly rate times 48. So again, everything I've mentioned in terms of self-employed and contractors, there's not necessarily any adverse or specialist there. It's just an affordability solution.
Right, okay. There's a fair bit to take in there, so thanks for that. So what can you just sort of summarise what options are available for the self-employed through yourselves that you think are USPs compared with your peers out there? So,
as I mentioned, the biggest USP 100% is limited company directors using the pre-tax profit plus salary. I think a lot of specialist lenders have got very good affordability models now, which is a lot of the reason why you'd use us. But we are just using that extra, potentially 20% worth of income to maximise that loan size. The 1 year's accounts up to 90% loan to value, again, very, very good bit of criteria. It isn't predominantly aimed at new build properties, but we do have an EPC restriction of A to C on it. So if if any of the ARs at yourselves do have any cases that they are struggling on a self-employed basis, then please do reach out to the mortgage lender.
Brilliant. So Charlie, what's the best way for our members to find out more about the mortgage lender?
Definitely get registered with us. Visit the website, themortgagelender.com. Top right-hand corner, you can press register. It takes 2 minutes to do. But what you're able to do once you're registered with us is not only are you ready to place a case with us, but you'll also get our marketing. Now, our marketing is not just throwing our products at you every week. What we do is a lot of market insight, a lot of market research, thought leadership pieces. We have an economic update that goes out once a month as well. So it's a lot of industry insight that can be passed over to the brokers. So that's one way. The other way I would say is, as I mentioned earlier, log into the website, go on, find your BDM, put in your postcode, and that pops up with your telephone BDM and your field BDM's details. They are more than happy to get meetings booked in, whether it's online, face-to-face, or whether you just want to have a phone call with them. That would be absolutely fine as well.
Brilliant. I think, Charlie, we've covered a fair bit there in such a short time, but thanks for giving us an overview of the market. As we've mentioned, there's lots of opportunity out there for our members. So it just leaves me to say thanks, Charlie, for joining me today. We'll include any links with the podcast, but do feel free to drop or call Charlie or myself with any questions you may have. All it is for me to say is thanks for joining me and look out for my next podcast.